Growth-focused investors often find themselves in a challenging situation that feels like a paradox. The most successful and innovative companies almost always seem expensive when viewed through traditional valuation metrics, but holding off and waiting for them to look cheap can often lead to missed opportunities for compounding returns. Compounding is the steady process of reinvesting profits and gains, and over many years, this is the force that builds enormous fortunes. Because markets rarely present perfect opportunities, waiting on the sidelines can result in watching a company's stock climb while you remain uninvested. Recently, market volatility has created openings to invest in 3 high-quality platforms. These companies are growing their revenues at impressive rates ranging from 13% to 27% per year, and as they continue to scale, their competitive advantages only become stronger. This set of companies is very different from the many artificial intelligence businesses that currently trade at extremely high valuations, often around 100 times their sales. Instead of burning through cash with little to show for it, these businesses already generate meaningful free cash flow. They are positioned to benefit from broad, long-term economic trends that are not affected by decisions from the Federal Reserve or by political shifts. In other words, these companies are riding waves of growth that are much larger than temporary economic cycles or election seasons. This makes them attractive options for investors seeking stability along with long-term upside. Let us take a closer look at each of these 3 outstanding growth stocks and understand why they stand out in today's market. Amazon, the giant of global digital commerce, continues to demonstrate that its enormous scale has not slowed its growth potential. In the second quarter of 2025, Amazon reported revenue of $167.7 billion. That figure represented a 13% increase compared with the same quarter a year earlier. Even as a company with a market value of $2.5 trillion, Amazon continues to expand like a smaller challenger rather than a mature, stagnant corporation. An important milestone was reached in its international operations, particularly in India. Losses in its India marketplace declined by over 89%, which indicates that its overseas segments are finally approaching profitability after years of investment. This progress shows that Amazon's global strategy is starting to pay off in real financial terms. At the same time, Amazon is introducing artificial intelligence-powered seller assistant tools. These tools are designed to help merchants improve the efficiency of their operations, which in turn can make those merchants more successful on Amazon's platform. This initiative could open a new high-margin software revenue stream that many analysts may not have fully incorporated into their financial models yet. The potential for this software-based income could help Amazon achieve even greater profitability without requiring massive investments in physical infrastructure. Meanwhile, Amazon Web Services, often called AWS, remains a dominant player in cloud computing. Although it faces stiff competition from Microsoft and Alphabet, Amazon's advertising division and its international markets are both expanding their profit margins and adding diversity to its revenue sources. The company currently trades at about 30 times its expected future earnings. Even at that valuation, it is growing faster than many software firms that are valued even more richly. However, it is important to acknowledge the risks, including the possibility of tighter regulation and a potential slowdown in cloud computing growth. Even so, Amazon's massive scale, its wide range of business segments, and its ongoing improvements in profit margins make consistent execution the key element to watch. Roblox is another standout company with a unique model and a powerful network effect. During the second quarter of 2025, Roblox generated revenue of $1.08 billion, representing a 21% increase compared with the same period in the previous year. The platform's daily active users reached an astonishing 111.8 million, a level of engagement that every company trying to establish a presence in the metaverse wishes it could achieve. Roblox operates on a user-generated content model. This means the company itself does not need to spend heavily on developing new games, since its users create content for one another. However, Roblox does invest significantly in infrastructure and content moderation to maintain a safe and engaging environment for its community. Over the past 12 months, Roblox's revenue has climbed 27% to reach $4.02 billion. This remarkable growth fueled a 195% increase in its stock price over the same period, highlighting investor enthusiasm for its long-term prospects. Roblox's approach contrasts sharply with Meta's metaverse strategy, strategy, which has consumed vast amounts of cash without clear returns, and Epic's closed ecosystem, which limits outside participation. Roblox's virtual goods economy already produces substantial revenue, while the company continues to invest for the future. The company is also expanding beyond gaming into areas such as live concerts, educational initiatives, and branded experiences. These new ventures significantly increase Roblox's potential market size and create opportunities for further revenue growth. Nonetheless, investors should remain aware of risks including concerns about child safety, content moderation challenges, and ongoing net losses. Despite these risks, Roblox represents a metaverse platform that is actually delivering real revenue growth instead of offering only speculative promises. Shopify is the third company on this list and has become an essential partner for millions of entrepreneurs and businesses worldwide. In the second quarter of 2025, Shopify reported revenue of $2.68 billion, which is a 31% increase compared with the same quarter of the prior year. Its gross merchandise volume, which measures the total value of transactions processed on its platform, climbed to $87.8 billion, up from $67.2 billion 1 year earlier. Shopify's primary platform has been gaining momentum after moving away from expensive logistics operations. By exiting those capital-intensive efforts, Shopify has been able to focus on subscriptions and merchant services that can scale efficiently without incurring large fulfillment costs. Another key advantage for Shopify is its alignment with its merchants. Unlike some marketplace operators that compete directly against the sellers who use their platforms, Shopify positions itself as a partner invested in merchant success. This alignment builds strong loyalty and reduces the likelihood of facing significant regulatory issues. Shopify's free cash flow margin reached 16%, demonstrating that the business is producing genuine cash even if profitability under generally accepted accounting principles is still uneven. Of course, there are risks related to economic pressures on small businesses and to broader macroeconomic conditions, but global adoption of electronic commerce remains in its early stages. Shopify is also integrating artificial intelligence tools to help merchants improve inventory management, enhance marketing campaigns, and optimize checkout processes. By making its merchants more efficient and successful, Shopify indirectly boosts its own transaction volumes and revenue growth. Together, Amazon, Roblox, and Shopify highlight the qualities that set genuine long-term compounders apart from temporary market fads. Each of these companies delivers double-digit annual revenue growth, and each one benefits from a business model that becomes more powerful as it scales. Unlike many speculative ventures that consume cash without producing meaningful returns, these companies generate real cash flows. Amazon anchors global digital commerce with unmatched reach and logistics capabilities. Roblox dominates the social experiences of Generation Alpha by offering a creative interactive world that captures their attention. Shopify empowers entrepreneurs everywhere by giving them the tools to compete on a global stage without needing to build complex infrastructure from scratch. The broader trends supporting these companies are unlikely to fade anytime soon. Global digital commerce is expected to expand steadily for years to come. Virtual experiences and online communities are becoming more central to how younger generations spend their time. Small businesses and independent merchants continue to look for affordable and scalable ways to reach customers worldwide. None of these trends depend on the actions of the Federal Reserve or on political developments. They represent long-term shifts in consumer behavior and technology adoption that will continue regardless of short-term market noise. Volatility in stock prices can be unsettling, and it can shake investors' confidence in the short term. However, companies that are able to double their revenue every few years are precisely the kind of businesses that build wealth over the long haul. Value traps, which may appear to be bargains but fail to grow or create shareholder value, cannot match the compounding power of genuine growth leaders. Even after recent gains in their stock prices, Amazon, Roblox, and Shopify remain compelling options for investors seeking long-term growth opportunities. For patient investors willing to weather occasional market turbulence, these companies offer a path to significant wealth creation over time. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.